Rent to Retirement community. Thanks for tuning in. We are going to talk to Tanner Strobel today, who is an investor. He's got a lot of things going on, specifically tailored around life insurance and insurance in general. Why is that important for everyone to be considering? And how can you be a successful investor fitting an insurance policy specifically into your overall financial plan? For those of you who haven't explored this or maybe have a policy set up, this is a great option to not only protect your family and put yourself in a financial overall better position, but there's plenty of things you can do from a tax side. There's not many things that actually come close to the tax advantages of a life insurance policy. And you can even be a creative investor to invest in real estate and be your own lender, do some arbitrage on interest rates and things like this. So lots of exciting stuff. Tanner, thanks so much for joining us. Maybe you can start by just giving us a little intro on yourself.
Sure. Thanks, Zach. So happy to be here. Tanner Strobel, based here in Seattle, Washington. And I had the opportunity, to kind of dig into the financial, investment and tax strategy market in permanent universal indexed insurance was something that relatively interested me. I saw that as a big potential long-term to add into my overall financial strategy.
You threw out some terms like universal and just on an insurance basis. Let's center around that a little bit, just for someone that just doesn't know anything about life insurance at all. If you had to give us a few, just like 5 or 6 benefits of how life insurance is a benefit to your financial position and why you set up the policy in general, maybe just list some just like bullet points why you think it's beneficial to have an insurance policy as a whole, and why that's important in being financially literate.
Mm-hmm. Yeah, so everyone has a clock and that's running out, and life insurance is a way, to essentially, protect the people in your life that are ultimately important to you. And so, a form of permanent insurance here is you get that death benefit regardless of when you actually pass. The other benefit too is that it's actually backed by the S&P 500, for example, and so there's a cash accumulation benefit to that policy that ultimately, as you age, you're able to take against that policy and use in, other investment, means. So for real estate or market or anything else like that.
No, that's great. Obviously, we're all aware that life insurance is important for when our clock is done, I guess you could say, and when our time is done here, and to leave our family in a better place than just with no planning. So that's important. But there's so many things you can do on the investment side, which is really creative. I think a lot of people just don't even know the options here. And of course, we have Chris Reed with Capital Partners Wealth Management as well. He's our insurance specialist, so he's going to help clarify some different options. Chris, what do you think on the tax side? Let's talk specifically. I love to talk taxes from a real estate perspective, but from an insurance perspective, can you give us some bullet points on how you can? You have tax-free growth, right? I'll let you talk about it.
Yeah. So this is a soapbox that I've been on for about 10 years. And every year, the tax implications of the economic challenges that this country faces get worse and worse. So every year I find myself thinking, man, is it really going to get that bad? And then the next year it gets worse. So to make a long speech short, the amount of national debt that this country is currently buried under, when compared with income tax rates, means that the future tax liabilities of every man, woman, and child in this country is an absolute economic train wreck waiting to happen. The only question is when Congress gets together and turns up the heat on the tax rates. Not only that, lately, from an income tax perspective, the tax rates have to go up, but I'm in the state of Washington. Governments can do other things, like they just ladled an 8% capital gains rate on us here in the state of Washington. The federal government wants to lower the estate tax rates. And in the most recent, in the first congressional budget proposal, they wanted to reclassify all capital gains as earned income. So like I said, every time I think it can't get worse, it does. So what Tanner was talking about is using the life insurance as a tax shelter so that you can grow and create tax-free wealth that the government cannot get their hands on by building up, basically to be your own bank, to build up a cash value that then you can loan back to yourself tax-free. So from a taxation standpoint, it comes down to protecting your overall financial plan, protecting your family if your financial plan fails because you die, right? Those are kind of the two.
It's morbid.
Those are the
Yeah.
two big main features that kind of come along with a cash value life insurance policy.
We had a discussion previously about, Chris, that I think is something we'd talk about real quick is just how, I mean, what's the history of life insurance? I mean, how long has life insurance been built into the tax code this way?
Yeah, whole life. So if anybody's listening to this and you're going to get on the Google machine and you're going to have 25 different companies trying to sell you every type of life insurance under the sun. But the basics are back really in the 50s, 60s, and 70s, whole life insurance, a life policy, which was basically meant to run to age 100, your entire life, came out. So it's been around for a long time. It used to be very unregulated. And then Congress realized, probably because they were all doing it, that it was actually a tax shelter. So then that's when you started getting the bifurcation between like whole life and universal life, and there's a whole bunch of technical differences between the two. But so, but it's been around a long time. It's in the tax code. All the rich people do it, like because it's an unfettered tax shelter. So I don't think it's really probably going to go away because everybody on Wall Street and in Congress has one. But cash value life insurance has been around for half a century.
Yeah, my point in asking you that is the simple fact of this is one of the secrets of the wealthy, right? Is that they actually, taxes are the biggest expense we're all going to have. Real estate aside is one of the best ways to mitigate your exposure to taxes, to inflation, to a lot of these things, and so is life insurance policy. And those are interchangeable, and they can be a combined strategy where you can just create an overall better financial picture doing both simultaneously. So let's get back to Tanner and ask a little bit more about kind of what you have going on. I mean, Tanner, I kind of cut you off there and let Chris go on his tangent, but tell us a little bit more about, how you set up your life insurance policy and what kind of unique things you're doing to use that as an investment avenue, as well as the tax. I mean, I think we've talked about the tax structure of it.
Mm-hmm. Yeah, so essentially, I saw the permanent insurance policy as kind of a way to diversify my investment portfolio. Once I had a lot of other, parts of my investment portfolio already sorted out, and I had, additional income that I could put into that to diversify with. And so the permanent insurance is basically tracking with the S&P 500, for example, and that's building cash value over time while also protecting myself in the case that something does, happen in the interim. That's where that life insurance policy piece comes into play there. But long term, right, as the cash accumulation continues, then I ultimately have flexibility with that account to either pull money out and leverage for other investments, or keep that money in there and use that to either pass on to my kids and the next generation. So it gives a lot of different opportunities there. And right when that is passed on, there's no taxes taken out either. So it's a chunk of cash that gives you the ability to, be flexible as you age, and gives you that cash value to really kind of make changes to your lifestyle if you want to, and invest in places maybe that you haven't been in the past.
Yeah, that's excellent. I think there's two different tax sides to look at. There's the immediate cash accumulation, that's tax-free accumulation, right? So you're actually growing your net worth. That's not subject to taxes, but also the death benefit when that is actually paid, whenever that policy is due, which, as you mentioned, it will be due for all of us at some point in time. Mm-hmm. So that's passed on, and that's why you create generational wealth over time. And this is something that wealthy families have been doing and continue to do to a high degree over many, many years. So let's talk about the lending side of it a little bit. That's where it really intrigues me. I mean, I think people get the tax side, they get the idea that, like, okay, life insurance is pretty much necessary, probably to some degree, for everyone. But what about being a creative investor? And maybe Chris, you can speak on this a little bit, because the way I understand it is you can grow your policy tax-free, right? Tax accumulation, tax-free. And then if you say you had another real estate asset that you wanted to purchase, you could be your own bank, which is always a benefit, to lend against yourself to use as a down payment or something to acquire that asset while it's still accumulating, right? I mean, you'll be paid. This is what I mentioned earlier about a little bit of interest rate arbitrage, where you can lend to yourself, you're charged a certain rate, but your policy should be still growing, ideally at a higher rate. And then in addition to that, you're taking out that capital to then go and invest in another asset class like real estate, where you can get even a higher return beyond that. Did I explain that right, or anything you want to add to that?
No, that's pretty much it. The mechanics kind of, depend about on the policy, the person, their age, and all that kind of stuff. But yeah, I have a lady who, she just started her policy 3.5 or 4 years ago. She's doing $1,800 a month, so she's putting quite a bit of money into it. But she's building a house out in a town outside of Seattle here, and she needed $30,000 for something, and she was asking me, well, where do I go to get this? Should I go to Bank of America and take a loan out? And I said, I don't know. We looked up her policy at her current cash value, and I said, why don't you just loan yourself 30 grand? And she went, oh, really? And I said, yeah. So we filled out the form. The company ACH'd her money to her bank account. And so now she's used that $30 to help finish off that project. And she's just going to go turn around and pay that money back via extra premiums later. I've seen people do it where they will take it and go and buy cash flow producing properties. And then you can turn around and pay that cash right back into the policy while still owning that underlying piece of real estate. And then to your arbitrage point, is one of my favorite things, especially right now with interest rates as low as they are. Insurance companies, they write their interest rate contracts based on current conditions. So with interest rates very, very low right now, the policies that I write have a capped loan rate, meaning the insurance company, like right now, most caps are around 5%. When you take a loan from your own policy, and they are guaranteed for the rest of your life, no matter how high interest rates go, you will always have a bucket of money from which you can borrow at 5%. It's incredible because you borrow that money out, and then so they charge you the money, but they also credit you the interest from your market indice to whatever it does that year. So you can loan yourself money at 5%, but get paid 10% on that same loan money. Now you're arbitraging and setting up essentially a super low interest line of credit that you will always have for the rest of your life.
So is that how it works? Is basically a line of credit? Is it considered an actual loan? Is there any payback stipulations in terms of time frame? Are you paying interest only on the amount that's withdrawn? So like with a HELOC or something, as you pay it back, does that payment also reduce, or is it more like a loan structure where if you borrow $50,000 from yourself, it's a set payment? I guess it can't really be, right? If you
yeah. So that, I wish, that's a question with a seemingly short answer, but a super long, technical, obnoxious, boring answer. The bottom line is it's a loan. It comes out, and the reason why I can't just give you the straight answer is because if you've had a policy for 20 years and there's $1 million in there, you could take a $500,000 loan and never pay it back. So it doesn't even have to pay back. Or my lady, she's only had her policy for 3.5 years. Actually, I just ran an illustration, and even she doesn't have to pay that loan back. But if you do it early enough, I always recommend working with an agent, somebody who knows what they're doing and is actually going to be around to help you service the policy. Because if it's not done the right way, it can cause problems.
I mean, that's a huge point you just made, is having the right people, right? Obviously, that's why I personally and a lot of our clients consult with you, Chris, to give us some guidance on that. But I mean, the overlying theme, though, and kind of idea is you can build your life insurance policy. You can have the policy for the death benefit and the protection of your family, and create tax-free. So that's a main concept of having it, but also you're growing that policy tax-free. The death benefit would be tax-free if you set it up appropriately, but then you can be a creative investor to go above and beyond that to essentially pull from that policy at some point in time and be your own bank, where you could potentially, I mean, even though you're lending that money to yourself, that's still growing at a kind of set rate to some degree, as well as taking that money out and investing in other assets that you can expedite your return on. I mean, if someone, this is a lot going on, but if someone were to run the numbers on this, it's a no-brainer to do this. Obviously, there's a lot of intricacies with it, but it's very interesting. Tanner, tell us some more about kind of with your specific situation. What does the future look like? How are you structuring yourself to contribute to this policy and cover the life insurance that you need for you and your future family, but also what other things are you looking to apply this policy for, and just overall financially, what does the future look like?
Yeah, something I want to add to, kind of based off of what Chris was just saying, was you look at 401k policies or anything else that's kind of tied to retirement, and those all have requirements around distribution at age. And so one of the real great benefits about these types of insurance policies is that there are no age requirements for distribution. And so like Chris was alluding to with one of his other, with someone else that he's working with, she was able to pull that out. And I'm assuming she's probably well below her retirement age. And so that's one of the big appeals to this type of policy was for me, is that that cash value isn't locked in, and it's not something that I can't access until I become a certain age. And if you pull it out earlier than that, you get, a bunch of deductions taken on top of that because you're taking it out too early. So this cash value, or the insurance policy itself, was, something I saw as a way to kind of diversify my investment portfolio, minimize risk, but also still have a play in the market, while also still having a life insurance policy attached to that ultimately, was protecting myself and my future family as well. So I like the idea that, that cash, although it was going into a policy, was something that I would be able to pull out if I wanted to, for example, put that towards real estate or anything else that kind of made sense in the investment world, or just for, my future use.
Yeah, that's so essential, the flexibility. I'm very much, and I won't get on my soapbox, but anti-retirement, through the traditional, and we say traditional, even though it hasn't been around that long, but 401k type of retirement picture, just simply because I don't like the government telling me when and how I can use my money and penalizing me when I go outside of that. I mean, we want to create our own retirement picture. Our company is Rent to Retirement, mainly building that through cash flow, but overall being, financially literate and savvy. And it's all about control, and having investments that you're not restricted like that. So that's a huge point. Thank you for stating that.
Mhm.
I also want to ask you just about working with the right people, because this industry on the insurance side is just blowing up, where it's like, as Chris mentioned, you can Google or reach out. I mean, there's so many different types of insurance policies to set up, so many people selling different products. The easy thing which a lot of people do is, okay, just talk with an advisor, insurance specialist, and say, set up my policy for me, and I just want to forget about it. I get that, but the more important aspect is working with someone that really aligns with your goals, that can educate you about your options and then guide you on making the right choice. I mean, I surround myself with people in the industry that everyone invests in real estate, and they're doing these type of things that I want to learn about and also apply to my own life, not just someone who's going to set up, the account for me, just set up my 401k, even though I don't have one, set up my insurance policy, things like that. So as far as working with the right people, talk a little bit about, why you chose to work with Chris, for instance, and why that's important to have someone that's going to help you build that overall financial picture.
Mm-hmm. Yeah, so I think it really just comes down to trust. Obviously, you got to get along with the people that you're going to be working with, but none of this is going to work out, in the short or long term if you ultimately don't trust the people that you're working with. You're instilling confidence in them that they know what they're talking about and they have that expertise, so that you feel comfortable giving them that money, to ultimately give you returns and invest in the right places and at the right times. And so the other thing that appealed me to Chris was, he, like yourself, wasn't aligned 100% with, 401ks are the only path to retirement, and has this idea that, you can kind of expand beyond that and look at alternative ways to invest, whether that's in, for example, index permanent insurance policies, or through real estate, rental properties, all those types of things. So the idea that, his area expertise is beyond just the status quo of, the stock market and 401ks, and there's all this other opportunity out there that you can seize upon, was one of the big interests that kind of drew me to Chris, and ultimately why I chose to work with him over others.
Yeah, that's great. You hit on a lot of good points. I particularly like the aspect of looking at other non-traditional ways of investing. And I mean, you and Chris have some joint ventures going on with real estate
Mm-hmm.
deals. You're doing multiple things. I mean, that goes above and beyond surrounding yourself with, just someone who's going to set up your insurance policy for you, but actually help you to be strategic in using that the most appropriate manner based on your own personal goals and criteria. I mean, Chris, what would you say on that as far as, find the right, because I mean, how many times do you talk to people that you review the policy that they've set up 5-10 years ago and just kind of forgotten about it, and you're going like, what's going on here? What would you say about finding the right individuals in the industry?
Yeah, well, I mean, it's like we were talking about and how you and I ultimately met. Like there's so many people out there trying to separate you from your money. Sometimes it goes to good places, sometimes not so much. So yeah, having that holistic approach, that 30,000 foot view, the real estate, the stock market, the crypto, the insurance, whatever it is, having all those different pieces put together in the correct proportion and not getting overcommitted to one, and having like a different risk profile for everything you're doing is just so important. And so a lot of the times, like when we go through the life insurance presentation, people get excited about it because it is a very good thing. But a lot of times I'll talk people down off of the, hey, don't go sell plasma to put that extra dollar into this policy. Like maybe take half of that and save it in cash and then go over to Zach at Rent to Retirement and buy a turnkey piece of property, right? Because they're all going to do different things in your financial life. So the more market volatility where you experience, the more money I make and sometimes don't make, the more just so hyper important I think it is to have different buckets, different asset classes that are doing different things in your overall financial portfolio.
Yeah, that's vitally important. As we kind of wrap up here, Tanner, for someone that doesn't know anything about life insurance and how they can use it to offset their taxes, be a strategic investor, protect their family, et cetera. I mean, for someone that doesn't know anything or is exploring it, or maybe even set up a policy 10 years ago, I mean, what advice would you give to someone besides just educating themselves and talking to the right people? I mean, why is it important to know who you're working with and setting up the right policy?
Yeah, so I think, life insurance is one of those topics that people tend to kind of put off because the idea of why you need it isn't always the most exciting thing to talk about or come to terms with, right? And so, in the case of, these policies that are permanent, starting early is definitely important. The other thing I'd speak to is that, a lot of people, when I talk to them about kind of how I look at investments and my financials and how I have these different buckets split up, people tend to kind of always ask why I have life insurance at this age in my current situation. And a lot of people tend to just kind of compare apples to apples, like with a brokerage account or 401k or something like that. And it's something to keep in mind that they are not the same. They do very different things. And so, you can't discount one over the other just because you're not going to see, for example, 20% year over year returns with something like that, right? Or comparing it to, a high growth stock. So it's something that is a great investment vehicle, but, like Chris was saying too earlier, everything's in proportions. And so, you need to do your research and understand, what it is that you're getting involved in, what your buckets are, how they're proportioned out, and then ultimately, work with someone like Chris that you trust.
Yeah, it's building out that overall plan and how does it all fit together, and how are you going to be strategic to expedite your goals, your financial goals to the next level. That's not really exciting to everyone. I think the majority, and it's not ingrained into our typical educational system. We don't need to expand on the Kiyosaki, doctrine, but I think that this is something that people traditionally don't spend a lot of time educating themselves on, or really even want to learn more about. So, but it is important. And if you're diving in, looking at how to create a financial picture that is going to leave your family in a much better position and create generational wealth, as well as providing financial independence throughout that process, you got to learn about these things and be working with the right people. Chris, any final words for anyone that wants to learn more about life insurance? How do they find out about you? Any kind of last pieces of advice?
You provide, I'm sure, a link. So if you want to, if you want to get together and take a look, especially people with older policies that they've been paying into, it's 20 minutes. We chat, we take a look. I'll help you pull the documents from your insurance company that's actually going to explain to you how your policy works into the future. And then if it makes sense, awesome. If not, no big deal, but you'll get a holistic, honest approach to what you're doing.
And you charge people $1,000 per hour to review their policy?
Dangerous question when I have some folks that I've led to the water and then they just stand there staring at the water and they just refuse to drink. But that's something we all go through. No, it's no cost. It'll cost you 20 minutes of your life. It'll cost me 20 minutes of mine. I have the best part about working with everyone who's a Rent to Retire subscriber is open-minded, knows that the best thing is not necessarily what everybody else is doing. So I love the relationship we have, and I love that we can trust each other to do the best thing for our respective clients.
Yeah, you've given a lot of guidance to us, and in general, you've given a lot of guidance to our clients. We appreciate that, and you take good care of them, and you can open up the doors to thinking outside of the box in part of these different financial spaces. So, gentlemen, appreciate the time. For anyone that wants to learn more, we will include a link to Chris's company below, so you can schedule a consultation with him. It's vitally important that you are reevaluating your policy because life changes. It's a dynamic world out there, and you always need to be making sure that your policy is best equipped to fit your situation, and you're taking the most advantage of it over time. And that's something that you just take a little bit of time to learn about. So Tanner, Chris, thank you for your time.
Thanks, Tanner.
Thank you. Thanks, guys.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.